How do you manage risk in your life? It's one of the most important questions for anyone on how to build wealth and general happiness in your life. The book, The Zurich Axioms, is about risk management and speculation, if we can ignore the slightly sensational title. The book gives us 12 major and 16 minor axioms to apply to your finances and in your life. Let's start with the first axiom, on risk. Worry is a sign of health. It means that you care about something. Worry is a part of life's grandest enjoyments. We should worry about everything we care about. Love, did she like me, friends, work. Without worry, we would live a pretty boring life, so we need to learn to embrace it. Once we've learned to embrace our worry, we must understand that worry in our personal finances means that we care enough to be proactive and do something about it. If you're not worried, it means that you've not risked enough. This brings us to our first minor axiom. Always play for meaningful stakes. The investment community often says that a portfolio becomes safe when it's diversified. Indeed, there are as many theories on proper portfolio diversification as there are books written on how to become rich on the stock market. But the truth is, if you diversify, you reduce your stakes in each item, and as such, you would worry less, and at that point, you're just better off buying an index fund or something. And if you're heavily diversified, a small gain in one area is likely to be cancelled out by a loss in another. Legendary investor Warren Buffett has said this on diversification. If you can identify 6 wonderful businesses, that's all the diversification you need, and it will make a lot of money. And I can guarantee that going into a 7th one instead of putting more money into the first one is got to be a terrible mistake. This brings us to the second minor axiom. Resist the allure of diversification. The book suggests between 4 to 6 speculations at a time. This will allow you to keep track of them and parry if something meaningful happens. This is impossible if we follow a diversified portfolio with 20, 50 different stocks in it. Put all your eggs in a basket and then watch that basket. Axiom number 2, on greed. Always take your profits too soon. This all sounds well and easy, but how do you actually find what is too soon? The thought is to get out before the peak has been reached. So in order to answer what is too soon, we have the minor axiom number 3. Decide in advance what you want from a venture and get out when you get it. In speculation, there's no clear end goal, so you need to define it yourself and try to stick with your self-defined goal. One way to keep sticking to the goal is to reward yourself when you've reached it. Go out for a dinner, buy something nice, go on holiday, something like that. Axiom number 3, on hope. When the ship starts to sink, don't pray, jump. The axiom is about saving yourself when you're inevitably wrong. When one of your speculation is not going the way you thought, you need to identify why and ask yourself if it's likely to be fixed or if your initial thought was wrong. If it was wrong, it's better to take a small loss to protect you from a bigger one. The old cliche of saying the hardest person to admit that you were wrong to is yourself is very true in this case. This brings us to minor axiom number 4. Accept small losses cheerfully as a fact of life. Expect to experience several while waiting for a larger gain. Axiom number 4, on forecasts. Human behavior cannot be predicted. The stock market is just that, a colossal engine of human behavior. Take that into account when you speculate. Well, unless someone invents psychohistory. Better jump on that. Axiom number 5, on patterns. Patterns appear in the world of money from time to time, but they never last, and if they do last, you can't base your plans on them. You should be very cautious of any advisor or oracle who bases predictions or claims on them. The different patterns can be summarized with the following minor axioms. Minor axiom 5, beware the historian's trap. This is the belief that history repeats itself. Minor axiom number 6, beware the chartist's illusion. This is similar to the historian's trap, but it's with fancy graphs instead. Minor axiom number 7, beware the correlation or causality delusions. It's human nature to construct links between events, but you need to be wary of it. Minor axiom number 8. Beware the gambler's fallacy. Take care where you're on a streak. Always follow your guidelines and don't skip out. Axiom number 6. On mobility. Avoid putting down roots, and if you do, keep them shallow. Roots are often sentimental, following our feelings and nostalgia. You must learn to keep them away from your money-making ventures. This brings us to the next minor axiom. Number 9. Do not become trapped in a souring venture because of sentiments like loyalty and nostalgia. The recent hype in GME and diamond hands is a good example of this. People being left in the trenches at the top in order to stick it to the man on Wall Street. This is not how you should think. You should get out when you can, take profits when you can. No venture owes you anything. Just because the payout hasn't happened yet, don't stay. Value your freedom and look around if you find something more interesting. Minor axiom number 10. Never hesitate to abandon a venture if something more attractive comes into view. Axiom number 7. On intuition. This is one of the more difficult ones to explain, but it says that a hunch can be trusted if it can be explained. It's very easy to put in words, but it's much more difficult to put in practice. Basically, there are 3 ways to look at hunches and gut feelings. You distrust them blindly, you trust them blindly, or you try to understand why you're feeling them. Sometimes you'll be able to explain it, other times you will only know that you know, but you don't know how. But you need to be wary of hunches, you need to stay worried. And more importantly, you must never confuse a hunch with a hope. Axiom number 8. On religion and occult. It's unlikely that God's plan for the universe includes making you rich. Minor axiom number 12. If astrology worked, all astrologers would be rich. This is not exclusive just to astrology. It can be used for tarot cards as well or anything like that, but no one can see into the future. Minor axiom number 13. A superstition need not be exercised. It can be enjoyed, provided that it can be kept in its place. But as always, don't let anything lull you into an unworried state. Axiom number 9. On optimism and pessimism. While optimism is the basis of the modern economy, believing that the future will always be brighter than today, in order to survive as speculators, we need to seek confidence from understanding a situation and knowing how to act if certain outcomes come to pass. Optimism and pessimism, on the other hand, comes from hope or lack of hope. That you just pray for something to happen, while you don't really know what you will do if it happens. So don't let those good or bad feelings cloud your judgment. Axiom number 10. On consensus. Consensus is something that's drilled in us from when we're young. If everyone agrees on something, it must be the best, no? It's the basis of most Western governments, democracy and all of that. But the axiom says to challenge the public opinion and don't follow it blindly. Form your own thoughts. Minor axiom number 14. Never follow speculative fads. Often the best time to buy something is when nobody else wants it. It's difficult to follow this, though everyone knows to buy low and sell high. But prices are often low because no one wants it and vice versa. So you need to form your own thoughts, do not follow the herd mentality. And as Buffett says, be greedy when others are fearful, and be fearful when others are greedy. Axiom number 11. On stubbornness. Stubbornness and perseverance is great in some aspects of life, but not when you speculate. Stocks don't owe you anything. Take the defeat and go somewhere else. Minor axiom number 15. Never try to save a bad investment by averaging down. The reason why we want to avoid averaging down is because we convince ourselves the investment was worthwhile in the end. In general though, you still lose money. Say you buy one stock of the cleverly named company, Average Company, for $100. The stock price then drops to $50. You've now effectively lost $50 on your initial investment, and the price needs to double for you to even break even, let alone make a profit. However, if you cleverly buy one additional stock of Average Company at $50, the average price you paid for the company is then $75, and the price only needs to reach $75 for you to break even. The price then magically goes up to $75, and you're very happy and you sell it at a break-even price. But in reality though, you still lost $25 on your initial investment, and you gained $25 on your second investment, which left you where you started, at zero. So never try to save a bad investment this way. Axiom number 12, on planning. As Mike Tyson so eloquently put it, everyone has a plan until they get punched in the mouth. The longer the time frame you plan for, the more likely something unexpected will happen. Minor axiom number 16, shun long-term investments. Choosing a forever home or forever dividend stocks is just not feasible. There are too many unknown variables that might mess this up along the way. Now these 12 major and 16 minor axioms should be in the back of your mind when you do any form of investment. You shouldn't take them as complete truths, but they should be something you consider whenever you buy something or whenever you invest in something. Thank you for listening, and I hope you learned something.